Extra chili. Alexandra Bruel, Wall Street Journal. Memo. Buzzfeed plans to rely on OpenAI to enhance its quizzes and personalize its content, while humans offer ideas, quote unquote, cultural currency, and quote unquote, inspired prompts. There had to be some entity to jump in right in the deep end. BuzzFeed strikes me as good a place as any. They have a long history of straddling a strange sort of middle ground between traditional journalism and the reporting of news and other novel information, and then on the other side of that fence, just putting stuff out into the world that is attractive, shiny, ultimately probably not that sustaining or nutritious from an intellectual perspective. I'll be certainly interested to see how they communicate where they're using the tech from OpenAI versus not as they go forward. I think it's unlikely that they will label instances where OpenAI's software is deployed in order to, enhance quizzes and personalize content. But there's a non-zero chance that they might put a little badge in order to show off how capable they think OpenAI's tech is. I don't know. But I suppose better that we have some outlet, again, jump into the water and show everyone else what it looks like to embrace these tools, as opposed to more conservative or sort of wait and see approach that most other entities are going to take. Or if we think back to CNET from last week or the week before, employing the tech but not being especially upfront about doing it. Chainalysis, a look at crypto money laundering in 2022. Illicit addresses sent nearly $23.8 billion worth of crypto, up 68% year over year. 4 addresses got more than 1 billion US dollars equivalents combined. DeFi got record funds and more. I would be particularly interested to read this piece in more detail because it's interesting to me that an outlet which reports on blockchain technology, cryptocurrency, is choosing to publish the story as opposed to waiting for perhaps a more adversarial outlet to do it. It's obviously on the surface cause for concern. 68% increase year over year in transactions involving quote unquote illicit addresses. Not clear here what an illicit address actually is, which again, reason to go read it in more detail. The fact that 4 addresses got more than $1 billion combined, also potentially interesting. In general, though, I continue to look at any stories about the extent to which crypto is used for money laundering with, it's not like money laundering wasn't happening before. It's that it was utterly unobservable and uncapturable, incapturable. I'm not sure either of those are actually words. So while you could look at this trend and say, oh gosh, shouldn't we be concerned about crypto because there's this huge upswell and massive total numbers of illicit transactions that we would traditionally describe as money laundering. But in the before times, we just used front companies, shell corporations, and quite frankly, like bags of money in order to facilitate illicit transactions. So I don't really want to immediately lean into the narrative that crypto is bad because it's facilitating these transactions, because to me, that framing has this assumption baked into it, which is because of crypto, these things are happening. I don't think that's true. Bloomberg. Sources describe how Twitter Trust and Safety VP Ella Irwin has become the chief executor of Elon Musk's whims, even when they go against established protocols. This is a subplot to the takeover of Twitter by Elon, which is only now sort of beginning to develop, and that is, who are the lieutenants which have authority to make significant changes to the organization, the way it operates, that report, or who report directly to Elon. Sounds like Ella Irwin is one. Esther Crawford I've seen is another. And this framing, Elon's whims, reasonably objective description of how he can operate from time to time. Going against established protocols, though, isn't that kind of the whole game at this point? Like, I suppose we could go back and have this argument again about how Elon buying the company is a net negative for the company. My problem with that is that, what's your alternative? If the alternative was allow the company to continue to operate as it had been under Jack, or most recently under Parag, can you honestly make the case that you believe the business and the service, the experience, the nascent protocol would be in a better place? I'm not sure that you can. You'd have to have a tremendous amount of, frankly, proprietary information in order to support that claim. And dislike him for whatever reasons you dislike him, be frustrated with the changes in the product for whatever your reasons are. There's more change occurring within Twitter, again, as an experience and as a business, since Elon took control than, I think it's fair to say, in the year prior. So maybe, to the extent that we're still looking for some sort of dispassionate or quote unquote fair way to evaluate his tenure as the leader of the company, let's look at the last year, how the business operated, what its usage numbers were, what its product evolution trajectory and velocity were, and then we'll judge Twitter under Elon a year after he took control. I think it would be even fairer to look at it 6 months after he took control. Keep in mind, I don't even think we're at 2 months yet. I don't have that moment in time baked into my brain, but it hasn't been that long. So, Ella, go against those established protocols, girl. Let's make some change. Chavi Mehta, Reuters. Intel reports Q4 revenue down 32% year over year to $14 billion versus 14.46 estimated. Data center and AI down 33% year over year, and Q1 2023 revenue guidance below estimates. Stock drops 9% plus. Intel's at a rough spot, no question about it. It would be a tremendous shame for the story of Intel to end with where it has been for the last handful of years, which is completely missing the boat on where the majority of growth in semiconductors and chips more broadly went, which was to smaller, more mobile devices. And I mean, again, it would be a tremendous bummer. I hope that the company can weather this incredibly difficult period and come back to prominence and greatness and success, because it's Intel. It's a big deal, sort of psychographically. Revenue down by a third. Data center and AI business lines also down by a third, and revenue guidance is below what the market estimated the revenue guidance to be, and the stock only drops 10%. I'm not a cheerleader for Wall Street as a guiding mechanism for business by any stretch, but 9% feels like a number that if you're trading in material positions of any equity and you discount it by 9% when the revenue is down by a third, just 9% feels like a number that's got to be baked in to your risk calculation. I would have expected more. Again, not because I want to see Intel do poorly, but because, I don't know, isn't Wall Street's job to send signals that, you got to right size this business or right the ship more accurately, because it's not necessarily about headcount or scope or anything like that. Jess Weatherbed, The Verge. The EU Commission says Google has agreed to update its Store, Play Store, hotels, and flights products to provide clear and accurate information and comply with European Union laws. Tell me you're worried about the case the US federal government is going to make against your business without telling me you're worried about the case the US government is going to make against your business. This sounds like the definition of let's get some highly affordable, almost already locked and loaded in terms of product change, business strategy change. Let's get some positive press immediately so that we can have some attempt at influencing opinion about being charged with anti-competitive practices in this other area of our business. It's not clear what clear and accurate information is. The notion that those changes now bring it into compliance with EU laws, I always find to be a hilarious example of how feckless regulators can be. I understand that it would represent a significant harm to the citizens of the European Union, but you got to ask yourself, if those Google products had been operating beyond or outside of compliance with European Union law, what was stopping the European Union from just injuncting those businesses, preventing them from operating? I'm reminded of the last time a major US tech company was dragged, well, not the last time, last major time that a US tech company was sued for anti-competitive behavior by the US federal government, and that was Microsoft. And there's this story that it's sort of mythical at this point. It's unclear whether or not it really went down this way, that the Attorney General at the time, Janet Reno, levied I think, $1 million a day fine against Microsoft for every day that it continued to ship Windows with Internet Explorer bundled in, because that was like the wedge to get the case to somewhere useful. And as the story goes, that fine was announced by the US federal government, and Bill Gates turned to the legal team and said, "Oh, so we can just cut a check for $30 million and go home? Because I don't want to sit here in Washington any longer than I have to." Like, that story is largely about the inability of the regulator to understand the scope of the business. But quite frankly, would it be any different in Google's case today? I mean, maybe Google is such a successful business that even if you chopped all of those products out of the European market in a heartbeat, which I understand technically speaking is likely impossible, but even if you did, would it make a material enough impact on Google that they would snap to? Who knows? But again, all this is hypothetical, because what's actually happened is they have come into compliance with the law. But again, I think the most likely explanation for them doing this is simply so that they look like good guys relative to the news that dropped earlier this week. Carly Page, TechCrunch, the FBI, US Department of Justice, Secret Service, Europol, and others seize ransomware gang Hive's site and decryption keys. The FBI had access to Hive's network since July 2022. The interesting part here to me is the FBI had access to Hive's network since July 2022. That reads to me as somebody went deep cover and associated with the ransomware gang long enough to create the opportunity to seize their assets and compromise the organization. Good. Law enforcement should enforce law, and ransomware can be a particularly insidious form of cyber crime. So I don't know anything about Hive or what it does. Ransomware would imply a common set of activities. But I suppose it's also relevant that decryption keys were one of the things that were seized by law enforcement, because the world we're headed toward, least the online world, keys are going to make or break a lot of things. Finbar Flynn, Bloomberg. After losing billions on mobile bets, Japanese e-commerce giant Rakuten raised around $1.9 billion for its mobile business and plans to sell its banking and securities units. I don't know much of anything about Rakuten's business. I see their logo on soccer jerseys. That's about the extent of it. The notion that the business has lost billions on its forays into quote unquote mobile, but has raised another $2 billion to keep going after mobile would, at first glance, seem foolish until we consider the notion that it's going to sell two business units which, in this moment of late stage capitalism, would seem like the safer bets financially to trade in financial services. To me, that indicates a belief in the importance of quote unquote mobile as an area of investment, and or the extent to which banking and securities businesses are either not where they want to be from a strategic perspective, or are too costly. In any event, I'll be curious to see what they do with this $2 billion to attack mobile. Stuart A. Thompson, New York Times. Analysis of hundreds of ads on Truth Social. Major brands are non-existent, replaced by diet pills, miracle cures, gun accessories, and Trump-themed trinkets. Show us where your loyalties lie, New York Times. That's a trollish comment. But the interesting thing here to me is not that the advertising that is helping to support the Truth social network is spurious, silly. That's not what's interesting. What's interesting to me would be the comparison of the categories of things advertised on Truth Social against the things advertised on, say, Alex Jones's programs, both now and in the past, and Fox News and maybe the One America News Network. I'm guessing, I don't know, this is a guess, there's a significant degree of overlap there, because the demographics and the psychographics of the people who are spending time on Truth Social probably quite similar to the people who spend time with those other properties. I don't know what more there is to say there. Certainly not a sort of implicit defense of the things that are advertised on more left-leaning or progressive or blue media properties. I'm sure we could find just as many sort of knucklehead products being offered. But that's not what this story's about. This story's about Truth Social, which I also am willing to predict. Maybe should we put a long bet out here? By the end of this year, it will will no longer be. It will fall victim to the social network Highlander, as I've come to think of it. There can be only one. Michael Bodley, Blockworks. Sources: Amazon plans to launch an NFT initiative in April 2023 and has looked at layer one blockchains, blockchain-based gaming, and digital asset exchanges. Another one that wasn't on my bingo card, another blind spot. The first reference that jumps to mind here is Ben Thompson, who said Amazon's goal in his mind was to get a piece of every transaction that occurs on the internet. You can think of AWS that way, not just, delivering paper towels to your house. I got to order light bulbs, by the way. I feel like I'm looking a little dark. So it shouldn't be surprising to learn that they have at least explored the trade in non-fungible tokens. What is surprising is the idea that they're going to launch something in April. Amazon, almost more so than Google or Netflix, maybe a more topical example, more recent example, is ruthless about spinning up a product, putting it out into the world, and then nuking it if it doesn't look like it's successful. So let's not all get hot and bothered and think that, by the end of the year, we're all going to be buying NFTs on the Amazon app on our phones. It's entirely possible that they will launch something in April and kill it before June. But the idea that they're exploring or have explored a layer one chain, I assume, of their own, otherwise this headline would probably indicate, snapping to Ethereum or something else. I'm not familiar with other layer one chains, though. I'm sure they're out there. As well as blockchain-based gaming, digital asset exchanges. That last category strikes me as the place where they're most likely to want to play. If you are someone who likes to trade in limited release things as a status symbol, I'm looking at all of you kids in your Supreme jackets, selling you the physical item along with the NFT that represents that item, or not even selling you the physical item in the first place, that seems very much in Amazon's wheelhouse to me. Because if you're going to buy it, why not let Uncle Bezos get a taste? James Schotter, Financial Times. Over 100 Israeli tech groups let staff join a quote-unquote warning strike over controversial government plans to curb judiciary powers, the latest warnings by businesses. I presume, from the way this is worded, that this is a way for employees of businesses in Israel to strike as a form of communicating to their government that the government's apparent interest in taking power away from its judiciary branch is not something they're interested in seeing happen. That the idea that the Israeli government wants to do that, the executive branch wants to do that, is news to me. But then again, I don't pay a tremendous amount of attention to Israeli politics. I probably should, if for no other reason than it's interesting to hear of what I think of as a instance of democracy taking apparently intentional action to take power away from one of its branches, therefore unbalancing the scales, the checks and balances, if you will. But I can't speculate anymore. So, Dan Milmo, The Guardian. Twitter co-founder Biz Stone says Elon Musk, quote unquote, doesn't seem like the right owner for Twitter, and claims morale and content improvements have been lost under Musk. Where you been, Biz? I don't know how else to consider the comments from a founder of the company who doesn't have any active involvement in the business, and to my admittedly extremely limited knowledge, doesn't do anything in the industry today. Like, I haven't heard Biz Stone's name except whenever there's something to say about Twitter, in which case he's venerated as co-founder of the company. But if he doesn't think Elon Musk is the right owner for the business, who does he think should be? Would it not have been worthwhile to vocalize such opinions the moment Elon announced an interest in owning the company? Perhaps. But if we grant his premise and just acknowledge the notion that Elon doesn't seem like the right owner for the company, I would interrogate that and say, does he seem like the wrong owner, or does he seem like the wrong operator? Because those aren't the same thing. And right now, they are the same thing at Twitter, right? It would certainly appear as though Elon is as hands-on as an owner can be in the day-to-day operations of a business. He tweeted earlier this week that he changed his display name to Mr. Tweet, and that the software won't allow him to change it back. So he's Mr. Tweet now. Shortly after buying the company, he changed his bio to uh, Twitter customer support. Like, he's as invested as you could imagine an owner of this business being in how the business operates and evolves over time. But to Biz's point, is there a better person to own it? I don't know, but I would grant the premise that there's probably a better person to operate it, right? We can look at SpaceX as an example. I know the name Glenn Shotwell as the person who effectively runs SpaceX on a day-to-day basis, whereas Elon is still majority shareholder and, I'm sure legally speaking owner. I'm sure there are similar people at Tesla who make the trains run on time. And as we just learned earlier today, there are other people at Twitter, like Ella Irwin or Esther Crawford, who are, I'm sure, as elbow deep in running the business as anyone could be. They're just not the owner. So I don't totally disagree with Biz, even though I can't help but get this feeling that he's just, off living his life as someone with unlimited money, and then making comments probably because he's being asked by people whose job it is to have a new story to share with the world every day, not because he's like calling. I don't think Biz was the one that called Dan Milmo at The Guardian and said, I got opinions. You should share them with the world, not me. Biz has a Twitter account, although that would be funny, wouldn't it? If Biz or Ev Williams or Jack started to get particularly loud and critical about Elon and then their accounts got turned off. Because, let's face facts, that's the sort of thing Elon would probably consider doing. Kyle Wiggers, TechCrunch. Crowdbotics, a software development platform with a library of pre-built app architectures, raised a $40 million Series B led by NEA, bringing its total funding to $68 million. I'm not a software developer, so the notion of a development platform with a library of pre-built app architectures is somewhat fuzzy to me. The way it reads is a further refinement of the ability for somebody to take off-the-shelf components and produce a bespoke piece of software out the other end. That is a positive evolutionary trajectory for the building of software. Could be a compelling product at some point in the future. What's interesting is the relatively affordable amount of financing that the company has taken on. I don't know how mature they are. They're mature enough to get a Series B, and I don't know, for the limited amount of time I spend paying attention to venture investing, the notion that a Series B is less than $50 million is relatively novel these days, in my estimation. But aside from that, I can't think of a meaningful comment to add. So that's all I've got to say.